The dollar bulls are on a relentless run to the upside. Can anything stop them from their path to the north? Guys, Ken Chigbo back with another E8's market fundamental update. Let's jump straight into this. So the dollar continues its path to the upside with 3 consecutive weeks now in the green with no signs of slowing down at present. As you can see here, if we look just technically for the moment, okay, and we'll go into the fundamentals, let's recap why we're pushing to the upside. So here, 3 weeks ago, we had this big push because of the geopolitical tensions, right? Remember, we had those tensions remaining very, very high between Israel and Iran, and things still do remain very high. But I just want to point out the fact that we also, coinciding with that, remember we had strong labor market data. Now stay with me because we're painting a picture with everything here, and it's really important that we know all the pieces to the puzzle. So we had strong labor market data, average earnings higher, amount of jobs being added to the economy higher, unemployment rate lower, all inflationary, right? Then let's fast forward. As you can see here, not last week, the week before, another push in the green. And we were focusing on inflation data. So CPI in the United States remained sticky, okay, still above the FOMC's target on an annualized level. Remember, they want inflation down at 2%, and we're still hovering above that and creeping higher, still showing signs of stickiness. And that's not really surprising given how resilient the economy is. If the economy is performing well, decent jobs being added to the economy, people still spending money, what do you think is going to happen to price of goods and services? They're going to remain high and sticky. So, okay, and then of course we also had Jerome Powell pushing back on market expectations for trying to price in another 50 basis point rate cut. And then look at last week, right? Retail sales, it just further reinforces what I was saying those weeks ago. Like the dollar, when it's going to bounce, it's going to come back with a vengeance. And that's exactly what we've done because the data has been solid. The data right now, the economy does not warrant a 50 basis point cut again. It didn't in the first place, in my opinion, but we'll save that for a whole nother video. Focus on right now. So if you look at the CME, okay, the CME watch tool, Fed watch tool, look at expectations now. This at one point was 60-something% chance that they're going to cut by 50 again. Not happening. 90.4% pricing now that 25 basis points going to cut. It's going to come there from the FOMC. Even really, when you think about it, given that things are inflationary, given the jobs still remain solid, economy still resilient, do we really warrant cutting rates again by 25 basis points to only potentially jeopardize, inflation again? I don't think a cut is necessary. But either way, market's been pricing that in. You can see here with the dollar, we ran into a bit of supply, heading into that big psychological 104 mark. Okay, when we're looking at daily there, there's some profit taking coming into play on Friday. That was it. But right now, when you really drop it down in lower time frames, it's been beautiful. Okay, been beautiful. Obviously, the flip side is euro dollar because euro makes up over 50% weight in the Dixie. So what we're seeing here to the upside, we're seeing to the downside for euro, and it's making really, really clean to trade. And we'll get onto euro in a moment. But look at these various periods of consolidation: flag breakout, pennant breakout, flag breakout. You get the point. And now we're just having a bit of a pullback and just probably retesting this next zone around. Basically 103.30 towards 103.20. So long as that holds, we can continue to push to the upside. Now, focus on this week. It's relatively quiet from the United States, but we're going to keep an eye on the weekly unemployment claims, which still remains relatively healthy. This is key. Manufacturing and services PMIs from the United States. Okay, so let's see how these come out. Given the economy has been improving and shown signs of resilience, I wouldn't be surprised if these numbers are still good. Okay, that would make sense given how the economy is performing on a broader scale. And obviously that would help the dollar continue to push to the upside. We can also expect plenty of volatility from the Canadian dollar because we do have the central bank decision, the Bank of Canada, where they're expected to cut rates by 50 basis points. Why? Because generally speaking, we've been speaking about this for the past few weeks, haven't we? The Canadian economy has generally been cooling. Inflation is easing. It's moving in the right direction. If you just look here at the most recent Canadian CPI numbers, let's just bring them up here just so we can just sort of see it for ourselves. Look, on a month-on-month basis, they're coming out a contraction of 0.4%, on a year-on-year, still, it's still heading in the right direction, relatively speaking, but you can see there's clear signs that inflation's coming down, negative deflationary territory, albeit they're not really suffering deflation, but inflation's clearly coming down there in Canada. So fast forward, we focus on this week with Bank of Canada. They're expected to cut by 50 basis points. And I think they're still going to leave the door open to more cuts. Okay. This is part of their cutting cycle. And they're one of the central banks that's moving quite quickly with cutting, because we are seeing an easing in the Canadian economy. And inflation is falling quickly to the Bank of Canada's target. So if we look here, obviously, as a base case with dollar CAD, again, we've been speaking about this for a while, haven't I? Where obviously this is remained in a range for quite some time, okay, since October 2022. And this is just subject to a big impulsive breakout to the upside, in my opinion. We've been trending to the upside. It's been quite clean to trade, actually. When you look here back on a daily, right, we went and retested. We went over this before. This lower acting trend line is part of that pennant. A bit of a double bottom, 1-2. The neckline there, nice breakout of that neckline, just open up the door. We had a little flag breakout here and pushing to the north, which has been quite clean to trade. Now, obviously, supply does run from 138.00, nice and psychological, into 38.50, and it's the upper acting trend line as part of this pennant. Guys, I said to you, if we break this down, we're going to fly. Look left, break that down this key sort of 38 towards 39 zone. We're going to run. 143, 146, 143, 146, no problem. Dollar CAD, in my opinion. Okay, obviously it's not financial advice, but I just see, just looking left there, it does look like a clean potential run for Dollar CAD, especially given there's a divergence now with the Bank of Canada cutting faster than the FOMC. The FOMC aren't cutting as fast as the Bank of Canada. We're seeing much quicker slowdown in terms of softening of economic data as well. So there's a monetary policy and economic divergence between CAD and dollar. So obviously dollar CAD does have a good opportunity to potentially keep pushing to the north here. But let's focus on and see what the Bank of Canada says this week. Now, euro has been an underperformer and we're expecting more volatility this week. In the previous week, remember we saw the ECB cutting rates by 25 basis points as expected, as you can see here. And generally speaking, they were quite dovish on the economic outlook for the Eurozone. All right, they do see risks to the downside in the economy. And I've been going over this. I said that the markets haven't been focused on the fact that the Eurozone's really slowing down. You know, and this week we're going to be focusing on these PMIs because they're key. And when you look at those previous readings, they were awful. These numbers were bad at those previous numbers. Like, we've been on a serious trend to the downside. If you look at those key manufacturing PMIs for Germany, you know, look at France, look at the Eurozone as a whole. We've just really been slowing down with these numbers. They're just not great at all. Okay, and this could further add some pressure to euro to the downside if they do disappoint. Now, obviously, we've been going over this within recent weeks as well. Clear trend to the downside. It's been really nicely to trade, actually, to the south. We had this double top here, that psychological 112, 1-2, neckline there at 110 taken out, leaving the door open for further downside. I don't know about you, but I've been capitalizing on this. You know, nice little, when we're trending and we're respecting structure, it's crazy. It's like so clean to trade. You know, look at this clear structure, lower highs, lower lows, you know, flag breakouts. Just been clean. Obviously, we've seen a bit of a pullback there on Friday, just some profit taking, most likely. I do still see this as vulnerable. When I look here on a weekly, you've got this bearish wick, this big bearish candlestick. I'd like to see that being filled to the downside and still going to have a real challenge at potentially breaking down 108. But of course, you know, at the end of the day, macros drive technicals. So it's going to be key to see how these manufacturing and services PMIs come out from the Eurozone on Thursday. And of course, depending on the dollar performance as well. Also, some volatility for GBP because we also have key manufacturing and services PMIs from the UK, also due on Thursday, where numbers have been relatively stable for the UK, but inflation has been falling fast. We saw that in last week, right? If you look at last week, UK CPI dropping down to 1.7%. And this, Governor Bailey gave us the hint with this back on the 6th of October. Okay, I believe it was the 6th of October. Yes, it was. He gave us a hint for this to say that, you know, we're going to be more aggressive with rate cuts, with inflation coming down closer towards our target. And look at that, dropping below there on an annualized basis to 1.7%. Services inflation coming down as well. So this has ramped up market expectations for those cuts. Hence why GP got battered, you know, on Wednesday. Personally, I did capitalize on that on Wednesday. We got absolutely battered here. Oh, sorry. Here. There we go. Bing. We dropped through this key support, this key demand around 130.50 towards 130.00, and we got the retest underway at the moment. So keep an eye on that retest, because if we get those rejections here, right, I've said this before, the next major demand zone, major support, really is around 127, 126. Okay. Now, obviously, keep an eye on these services and manufacturing PMIs from the UK. Okay, as I say, numbers are expected relatively stable. The UK economy is still performing relatively well. So obviously, if those numbers don't disappoint, GP is likely to hold some ground. But in terms of whether we carry on to the downside, it's dependent on the dollar. If that dollar bull momentum remains intact, you know, we're going to continue to see that push to the downside. And keep an eye as well on the geopolitical tensions, right? Because GP is seen as a bit of a riskier currency. And if the geopolitical tensions further escalate, what's going on at the moment in the Middle East, then obviously the downside is going to be seen. Okay, so once again, another week with economic events and volatility. Other than that, have a blessed and amazing week, and I'll catch you on the next video.